So this is good. Yeah, I won't be doing intraday options anytime sooner. 'Cause I
Okay.
want to get my hand, I want to get like little used to, doing the swing position, understand the concept, and make
Yes.
sure
Yeah,
I
yeah, yeah.
pull
You're not ready for intraday until you like
right.
kind of like know what the forces are. It'd be like
Exactly.
going into the jungle and not understanding, what
Right.
the animals out
Right.
there are, snakes and everything.
Right. But seeing you do it every day and you sharing your thought process behind it, letting us know your entry and exit and why you did it and how you chose the option, and this is really valuable
Yeah,
and helpful. Even yeah, thank you.
you're
Because
welcome.
then, yeah, seeing like you do it, we know how intraday option trading looks like.
Yeah.
Uh, right. And yeah, I think naturally I will organically
It's an incredible
I'll know when
tool.
I'm
Like
ready.
let's say you're in a trade and you're in a short trade. Um, and it's going to hell, and yet you don't want to sell, buy to cover. So you find out it has options, and now you can buy some calls, and you can hedge. How do you
Right.
hedge? How do you hedge? Are you using options?
No,
How are you hedging with the VIX? You're just buying like the VIXy or something?
no options. I was reading about it, like all the
Okay.
option traders how they hedge. So I'm just reading this concept. But in our small cap, we do intraday. So hedging is pretty much liquidating your position when it goes
Oh,
against you.
okay.
When it goes against you, you cut your loss.
That's a good way to hedge. Yeah,
Yeah.
I whenever the VIX gets down to like 20, that's when you want to buy some options on the VIX. Call options, the longest duration. They usually give you 6 months. Now, so long as the VIX is above the break even on that, so you pay like 850 bucks.
Right.
So let's say in 6 months the VIX is at 28, then you still have all your money and you can just roll it into the next VIX period at
Okay.
28 this time,
Uh,
and um, and then it will protect you from that VIX level up. So you can kind of
right.
keep it going in a way. But every time it comes down to like 20-ish, I always pick up one, two, three contracts, and it protects my portfolio a little bit,
Right. Right. Right.
a little bit for my
Yeah.
equity side.
I saw that. I'm following this YouTuber. Uh, he's a very nice guy. Looks like when he speak about options, look like he knows what he's talking about, and
Yeah.
he's doing the same trick, like buying wicks, and he was talking about the portfolio and hedging and risk management.
Oh, completely.
Uh,
Yeah.
yeah, so he was showing his positions, actually live position, all the Amazon he has, Apple and whatnot, and then how why he bought Wix and how he's hedging against Wix. So if so similar concept what you just explained pretty much.
Yeah.
Yeah.
Yeah. Well, if you don't buy it right, it can be expensive. So, these are the times when to buy it, though. Not right now. I'm just mean like during an economic period where, there's a lot of uncertainty. I mean, we're basically maybe at the top of a market. I don't think what happened on Thursday and Friday would have happened if I think that was somewhat a bubble
You
pop.
think?
I think so. It seemed like basically everyone said, this is ridiculous, and then they started to take profits one after the other. At a certain point, that's going to be a tipping point where that happens, and I think that's part of what happened. And then we had oil just drop precipitously on Tuesday, on overnight on Monday, and now we've scared the shit out of all the investors, and so now Wednesday and Thursday everyone's just scared of the market. So
Yeah, well,
basically, the market has to get low enough to attract everyone again. It's until the market is like, woohoo, this is so cheap. Until it gets to that level, until everyone goes, wow, Amazon for $2,400. Wow, Apple for 98 bucks. Until it gets to that level, I don't think you're going to see people quit their jobs and take their money and try and do this again.
yeah.
Because that's what happened. We just lost everyone who was in the stock market who is new to the stock market. We just lost all the newbies. Everyone just completely lost all of their confidence in the market.
Yeah,
And there's
that's actually it's a kind of a healthy correction, isn't it? Like let's
Yeah, it has to
read
happen.
out,
I mean, it
yeah,
has to
read
happen.
out, and then yeah. I mean, volatility would drop certainly if you have new money disappears. Um,
What's that?
oh, she's waiting. Okay, there she is.
Okay, yeah, I just let her in.
Yeah, okay, good.
All right, so I was trying to show you, waited for you to come. I was trying to show you that the Tesla at the money today is about $650. That's so cheap. That's so awesome. You can day trade Tesla for 650 bucks. That's great. But guess what? Tomorrow it's going to be even cheaper because the theta is negative 173. 166 is changing on us. So it's going to be 160 bucks cheaper than that. So it's going to be, instead of 650 bucks, it's going to be like 500, maybe even 480 bucks to get a Tesla call or put tomorrow. But that only happens on expiration day when these things get that cheap.
Can you make it bigger? It's too small. I can't see.
Um, I don't think I can, but the at the money Tesla strike is
Uh-huh.
is about $6.50
Okay.
per share, so 650 bucks. And tomorrow, because theta right now measures $1.70 loss per day per share, that's $170 of loss per day per contract. Then instead of 650 bucks, it's going to be 480 bucks
You
tomorrow.
talking about the 375 strike, right? Even or
It
380
doesn't matter.
doesn't matter.
That's the at the money price. The at the money price is going to track the price. The strike that's at the money is going to be the price. So in other words, and that's a great way you can figure out how much money you're going to make. Like let's say you say, what if Tesla goes up 30 points, 20 points, let's say 20 points. So then you can take the strike 375 and you can say, I'm going to get in at the money
Mhm.
for 650 bucks. And then you can say, okay, that's at 375. Now, when it's 395, it's going to be the equivalent of it being at 375. So therefore, the price my option will be worth is the current equivalent of the strike of 355. 355 will be $20 in the money, and your 375 strike will be $20 in the money when Tesla's at 395. Is anybody following this? So therefore, you can go look at the strike at 355 and see what it's worth. It's worth $1,800. So you can say, if I buy Tesla at 650 bucks and Tesla goes up 20 points, my option will be worth $1,800.
Oh, we're talking calls, right?
Yeah, it's going to be the same on the put side. The pricings will be the same.
No, the puts is more. I,
Well,
I'm looking at the. I'm looking at it on
that's only because
Thinkorswim.
the price of Tesla is 371.
Huh.
If Tesla was 375, they'd be the same. But right now it's going like this, and then then it'll be the same, and then Tesla will go down more, and then it'll be the same at the next strike. So so there's a differential between the put and the calls until they equal the strike again. If like the 370s, are about to become the same, but they're not pricing right now. They don't price until tomorrow. So yeah, they'll be roughly the same. They have to be. It's a mathematical thing. Because when you create a straddle and all the iron condors and all these different things, they all have to work out mathematically. So when Tesla hits 375.00, the price of the puts is the same as the price of the calls. Within a few cents, just because of trading momentum. But did you understand what I'm saying? Is you can figure out how much money you're going to make by going in the money the amount that you expect to be up.
So yeah, I'm trying to put everything you said together.
So yeah, let's just do it again. Let's do it again. So let's say, you know, Tesla's at 375. And we know that the strike for 375 right now is $650. We'll just use these numbers for right now.
Yeah, okay. Yeah. So let's say
you say in your mind,
690, yeah, 695.
what's it going to be worth if Tesla goes up $20 to 395?
Okay.
So just go $20 down on strikes and see how much Tesla was worth $20 down ago, which is 355. So you can go in there and it's between the bid and the ask, it's about $18 a share or $1,800. You see, I can point at it right there. It's hard for you to see, but I think you can see that on your big screen. So you can know that it's going to go up. So if it goes up $20, it'll be worth $1,800. Now $1,800 minus 650 is 1150. Divided by 100 shares is $11.5 per share profit for a $20 move. And you say, so why is that? Why didn't I get 20 bucks? Because of the delta. That's almost half. Did you see that? The 11.5 number I got is almost half. That tells me the delta of that option right now is a little bit above half. It's probably 0.55. So now we go over to the delta, and yeah, it's 0.52. But plus some gamma, which is 0.3, and you get exactly 0.55. Gamma is how much more delta you get for every point of difference. Gamma is an extra level for you guys. But gamma helps increase your delta as you go down in the money.
So let's say 375 call I bought thinking that 395 Tesla would be tomorrow, right? And I'm long, and I paid 695 for this. And then you said something at like you have to look at the 355 put, right?
You have to look at what?
A 355 strike put to calculate the difference.
But you just said that's if the price goes to 395, 20 points.
Okay. Yeah, so that's where I'm a little confused. So how do I do you calculate
I can get it out of you because you actually know the answer. I just have to get it out of you. So watch this. So the 375 strike, that's at the money. We know that. And actually it's $650.
Right.
Now, right now, the 355 strike is how much? Right now, at the same time.
355 strike is, oh, I see. So it's
like
I would go by asked, right? So 2095.
Yeah, it's like 1800 because you have to split it in half. 1900. It's actually probably close to 1900.
How do you, why did you split it in half? Like, what are you?
Bid ask.
Okay, so so when you calculate it, do you calculate by ask or bid?
Mid.
Okay, mid.
Always going to try and buy at the mid. You usually get the mid,
yeah.
if there's enough liquidity. Especially on Tesla, there's market makers all over the place.
So 1800. So that's how you got that 1800. That was a miss for me. I got it now.
Okay, that's where I got the 1800 from the 355. Okay. Because listen, when Tesla was at 355, the 355 was at the money. It wasn't in the money. It was at the money. Just like right now in our example at 375, the 375 is at the money. But when Tesla was at 355 in price, the strike 355, it was at the money. And at the money cost 650 bucks.
I see.
Not 1800.
Understood. So basically,
1800 is how much it costs if we're $20 in the money.
okay, yeah.
Okay,
So
so the reason why I know it's going to be worth 1800 when Tesla's at 395 is because that's $20 in the money from where we are now.
got it. Okay, so I see how
It's a little trick.
yeah, it's a nice trick. You prorated the
Yes.
and now you know. Okay, got you.
Yeah,
Thank you.
it's a
Thank
good
you.
way you could do like quick rough math, and it was accurate. From that, I even reverse engineered the amount of dollar per share profit I had, and then brought that into the delta, and it was the same delta. It all works. It worked out mathematically. So you can figure that out. You can say, all right, if I expect, this swing trade to go up 40 points, what's going to be my profit? That's why you see when I post my option alerts, I have a profit going to equal 85% or more. That's because I know exactly, like $1,800 over $650 is 176% profit. If somehow we could get Tesla to go up tomorrow 20 points, we could actually would be more, because tomorrow we need to subtract the theta. It would only be $480, and at the end it'd still be worth about $1,800 because there's almost no theta on in the money options.
Okay. So Delta.
Make something like 250% profit. So tomorrow's a really good day to buy any kind of trend on any stock with options, because the theta will be almost all gone, and if it goes in the money, it's going to be just pure profit. It's very good ratios.
Okay. So yeah, so there is some time benefit for tomorrow, as I understand, right? Because of
You'll
theta.
make 283% on your money if Tesla moves $20 from where you buy it tomorrow at the money.
Okay.
Well, like I was telling you about that guy in the chat room,
Yeah.
probably bought it like towards the close because it closed in the 360s
Today?
yesterday.
Oh, yesterday. Okay.
Closed in the 360s, and then it opened today at 386.
Yeah. Well, you got
So
lucky. A little speculation.
big market. Yeah.
Yeah. But he did lose money because between yesterday and today, he lost 100, and he probably lost about $170 per contract. How many contracts did he make?
I don't know. He just said he made $29,000.
28,000. So he lost $170 per contract just in theta decay. And what if Tesla went down? He would have lost a lot. So he got
Interesting.
lucky.
Hey, even one more question about the delta. So if I'm taking a at the money call today, 375, thinking that it's going to go 395, right? And then you just taught us how to calculate how much you're going to make, go 20 points back, 355, that's 1,800. You're paying 690 today. Points jump you're expecting, right? So how did you calculate the delta point? Like why I'm not getting the entire 20 points?
How do you count? What was the last part? What was that question part?
Okay, so
I got the
375.
premise. I got the setup. What was the question?
Yeah, so I'm buying something on 375 and expecting it to go to 395. So that's a 20 points for me, right?
Yes.
So out of that 20 points, you minus something saying that the delta would be some 11 or 12.
Okay, yeah, now that you understand it more, let's just do that math again. So I was saying that it would be worth $18. I was a little bit wrong. I think it'll be worth $19. It'll be worth, but let's just do the math again so it's the same. It'll be worth $18 when it goes $20 up in stock price.
Right.
And you bought it for $650. So then We take the, I don't know if you can see this, but I have
Yeah, yeah,
calculator here.
I, yeah.
So then we take $1,800 and we minus it from the 650 you paid, and we get $1,150 in profit. And so then I went 1,150 divided by 100, that's $11.5 per share.
Sorry, one more time.
So
I was
1,000,
making,
it was $1,800 minus
yeah.
650 is
Right.
1,150
Ah,
divided by 100 because you got a contract
got it.
is $11.50 per share. So you say to yourself, why am I getting $11.50 a share on a $20 move? Why am I not getting $20? And that's because options at the
You have to
money,
pay for the options, right?
options typically give you zero point 0.5 delta. Exactly at the money, it's 0.5 delta. This is why for swing trades and stuff, I teach you to get like 0.75 delta, because by the time it starts going up, you're getting 0.85 delta, 0.95. And you basically own stock, so that, you know, I don't complain to myself and none of you complain to me like, hey, it went up 40 points. How come I only got 20 points? You're going to get like $38 for your $40 move. It's great. But if you buy at the money, you
Yeah.
know, by the time Tesla gets up there, the delta would be, well, the delta will be pretty good, but only from there up. It's a parabolic curve. So that's why you make only $11.50, because you bought it at a delta that is a lower delta. So if you have 0.5 delta, you make 50 cents for every dollar of the underlying move.
Yeah. In a layman terms, this is how I understood
Yes.
delta. I have to pay for the options. So I'll minus that. Period. Period. You know what I mean? Because
Yeah.
I got into a contract, right, with them,
Right.
saying I'm buying the contract. So once it makes that 20 points move, I have to still pay for my contract money. So then leftover is my net.
How much you pay for your contract, you can tell by, you're buying 375, but you're paying 650, and so
Right.
that means
That's my
you,
contract.
the break even, like Rhoda was saying earlier, was 382.50. That means you're really paying for 382.50, which is kind of a ripoff, because you're getting 375 for
Yeah.
what has to be 382.50.
Right.
But when you buy at 0.75 delta, that premium goes way down. So like, for instance, just let's take a look at like this one, 0.77 delta. You're getting the 365 strike for
Mm.
$10 for like $11. You're getting the 365 strike for like $11. That's the
Right.
equivalent of a final price of 376.
Right.
So now you know, oh, over the current price of Tesla, I'm actually only paying $3. $3 of that is the premium, and the rest is uh, the intrinsic value or the stock. Now, but at the money, you were paying $650 for nothing, for just air, for just at the money. There was no in the money. And that's
Right.
why the difference, you know, at 75, it's half the premium, because you're halfway to one. Once you get to 0.9, you're going to be paying no premium, hardly any premium. You're going to be paying 1/10 the premium that normally would be paid. But on the contrary side, on out of the monies, you will pay less premium than at the money is the peak of premium.
Okay.
At the money is the peak of premium, and then as you go out of the money, then it becomes cheaper, and you're not paying for any intrinsic value, and you're paying for only a portion of the time value now, and it's getting smaller because it's just so unlikely. And that's why a lot of people are attracted to out of the money options,
Yeah.
because they are so cheap, but they're also so improbable.
Yeah.
But if you do get that probable move, if you're just, you know, you're looking at the charts and you really think that's going to happen, uh, and somehow no one else has noticed, then you'll get a good deal. But if anyone else has noticed, then the option writers are going to already put that into the contract. You usually cannot get a good deal. The only way you ever make money on options is if something happens that no one thought would happen. Like, dude, did you think Tesla was going to go to 380 today? I sure didn't. I thought it would go to 340. And I think everybody did.
Right. Right.
So it's a gambling out of the money. It's a
Yeah.
pretty dangerous.
Right.
But you know, there's times for it. Like
Yeah.
hedging, like I mentioned before, you're in a position and now you could buy some puts for real cheap against your position just in case.
Right. 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 Makes sense. Makes
Yeah.
sense. So now I kind of got the idea of how you about the option contract. What taking place once you get into the trade. Right.
Cool.
Nice. Thank
Yeah,
you.
let me see if I can. Well, I'm gonna keep it like the way it is. Yeah. But I pulled up Apple, so we'll do one more example because no, Apple strikes are all messed up now because of the split. Let's do an easy one. So just
Do Microsoft.
Microsoft. Well,
I
let's
have
see.
Microsoft
Yeah, Rhoda has a position
in the money.
in the money.
The
Nice.
money.
So Microsoft closed at 205.37 today. So that's almost at the money at 205 strike. So these numbers will make sense. Basically, it's $240 right now at the close of market. You can't buy them anymore, but at the close of market, right around then, if you were to buy one, it would have been $240 for one contract, $2.40 a share. If you had done that, then tomorrow you can look at the theta number right there, theta, and it says 33 cents per share minus. And that tells you every day it's going to lose that much. So tomorrow it's going to be worth $33 less. So you paid $240 today, instantly in the morning, just because of theta time decay. Even if the price is the same, even if Microsoft opens at 205.37, instantly that $240 you're paid is going to be $207, just because of theta drop. But had you bought the 202.50, it has no theta decay and 1.0 delta. It would have cost you $375, but tomorrow it'd be worth $375. So that's good, it has no decay. And you wouldn't find a strike so close like that at 202.50 with 1 delta, that's amazing, and no theta time decay if it was Monday. But since it's tomorrow's Friday, it's basically they're saying, hey, it's a blank check. You're basically getting the stock rented for free. You're paying the price of the stock, because right now it's $205.37, $205.37, and it's $202.50 for the strike. So the difference is $3, and you have to pay tomorrow about $3.75. So actually you are spending like 75 cents of rental price. So those numbers are a little bit off. But it's a lot better than the other one, which is $250 worth of premium just for at the money. But now, let's say tomorrow, Microsoft goes to 215. So that's 10 points up. You can find out how much money you'd make. You just go 10 points down from the 205. So 195, and it's about worth $10 at that point, roughly. So you paid $250 for the at the money today, and if it goes up $10, it will, I'm sorry, yeah, actually if it goes up $10 to $215 tomorrow, it'll be worth $10. So you made $7.50 on your $250. So you made $7.50 on a $10 move. That would imply 75 delta. Are you seeing how all these numbers start to work together? Yeah. Yeah. And that's probably correct. And in fact, it says here the delta of that option right now is 65 and then a 10 gamma, so that's 75. So that's exactly correct. All these numbers, they're all linked together. It's not like a rodeo and everyone's bidding or anything. They have models and pricing models, and it keeps it all, the action is hyperlinked to the stock. You can never really get, an accidentally good price. It's auto-computed by the CBOE. So a lot of people, they try to do it. I mean, it's very occasionally, maybe once or twice a year I find an option that has an odd pricing on it, and it quickly closes up like within 10 seconds, and you're like, damn, But I'm sure computers, are making money on that arbitrage on that, but not us.
Right.
And the good thing is that options have so much leverage that we can kind of be a little bit wrong. You can kind of guess. Most people are. People who are doing out of the money options or using Robinhood to buy, and they're like, woo, I made $21,742. They didn't know they were going to make that exact amount, and they couldn't have calculated it if they could. It's just like, you buy low and you sell super high.
And look at the P&L, yeah, and sell.
Yeah.
Not the chart.
Yeah. And then the charts on Robinhood don't even have time or price. It just shows you a picture.
Yeah. Oh boy.
Oh God. Can you imagine? So yeah, and then RH today, let's just take a quick look at that, because that just went to hell. Let's look at what we should have did better on
Yeah,
that.
that's very important. Dissecting your negative trades. Yes.
Yes, absolutely.
I want to feel your emotion today, even.
Oh,
Give me,
oh,
give me your emotion.
trying to
I,
suppress your emotion, because that helps. But I was a professional poker player, so you learn not to go on tilt. And yeah, today,
yeah.
I just had to walk downstairs, grab a glass of water, just needed to forget
Yeah.
about it. So for all intents and purposes, this stock was set up to do really well. And it kind of did. Once Rhoda and I were in there and it broke that second high, it went all the way up to 410, but we did not get out. I think I might have sold one contract up there out of 10. So I got out of a tenth of my position. And
What
then
was the
there's a
reason
thing where I
not getting
drop right
out?
here, where I think
Oh,
I literally sold that, and then I look. I typically do that I'll sell, and then give it some time to breathe. So I'll go, oh, I check, by the way, what else is going on? Are there any other emergencies? Because the market was only open for like 30, 40 minutes at that point. And then while I'm looking away, within 1 minute, boom, and then it just did not recover, and then, and I'm
yeah.
back to where I bought it again. I definitely, Rhoda was back to where she bought it. I think I bought mine.
Were you checking your JCP&Q?
No, this is RH.
Oh, I know, but I think
Yes.
when you weren't watching RH, I
That
think
could have been the moment. Let me
you were
check.
trying to get out of
That
JCP&Q.
could have been the moment because I was having trouble. I
Yeah,
put
it
an
was
order in,
early,
and it was just OTC.
right?
So even so, there are two charts, right? Main Tesla charts and the option chart. So when you guys get into a trade, what chart you guys look at? Option chart or the main stock chart?
I
I
love looking at the main
I
stock.
look both. I look at both. Well, no, I don't look at the option chart because I look at that
Yeah, I mean,
option
I look
chain,
at both.
but I look
But
at the stock chart.
yeah, but of course you gotta look at this. You want to look at the stock chart. Yeah.
Yeah.
Okay, so buy and sell happens, but at the option price, right? Option chart. It
And then
happens.
my buying and selling, I'm doing with these instant auto send buttons, even on the options. Just like you would with stock.
Okay.
No confirmations, nothing. I'll set it
But
to
you don't look
one
at the price
contract
there,
or
like what option, what price it's trading. Like you just follow
well,
the main chart and just hit sell.
I mean, if
Like,
it's a swing trade, I'll go check out the option chain. But if it's like a day trade, you got to go fast. So I'll just quickly revise a call that I might have typed in, like dot spy 2009 11 call 334. And then let's say the price is going to 335. So I'll just quickly come here and I'll change that 4 to a 5 and pull up the next strikes chart. So now I'm looking at the chart. And then, buy, bam. That didn't take too long. But like the way you have it is even better. And I need to start to set up mine to account for that because you could have a put, a call, and maybe one other call because you're not sure which one to go after, you know. And in Rhoda's case today, and mine too, we bought the 395 and it wasn't very liquid. If we had the 400 up and the 395, probably we would have noticed the 400 popping a lot more volume going on in activity. And that would have saved us that spread hell. I think that spread did cause me some extra losses. Because in the end, I think I lost like $5,500 on that trade. It was just absurd. It was ridiculous. I haven't lost money like that on a single trade since gold, like 2.5 months ago. So it was pretty crazy. And I think, like she said, I was probably freaking out about JCPenney. I mean, because JCPenney hit to the point where I was making $2,500 and I couldn't get out. I was trying to sell and it wouldn't take my order. So I'm probably like a mechanic.
Did you get out? Were you able to get out?
Here's the chart on that.
Were you able to sell your shares?
It shows all the outs. So I got out at the very top for 100 shares. I had 6,000 shares. So I started punching the 100 button right up there. And then once this candle started going strong, like probably right around there, not even too bad. I think it might have been here. I hit type 6,000, sell all, just pew, get rid of it all. And it just wouldn't take. And I'm watching the candles go down and I'm looking at my order and I'm wondering, did I put in an extended hours order? What the hell's going on here? Maybe it didn't go. Maybe my internet's down. What's going on? So I canceled it. I probably should not have canceled it because I was probably in a queue behind everyone else. If I hadn't canceled it, maybe it would have started filling me moments later. You know, you just never know. But I did cancel it, but I started trying to get out and it just wouldn't take. I had tons of orders going on there. And look, I couldn't get out. I got 800 shares there, 400, 200, 200. I had lost all those gains. That sucked. It really sucked.
But Sykes, actually, he bought on the bounce. I don't know which one though.
Yeah, probably this one.
He made a little bit of money on the bounce.
Yeah, yeah, that's cool. He bought 22,500 shares, I think he said. Because I was trying to figure out how much more money did he make than me.
And this is OT, this is an OTC stock, right? This
Right.
What?
one. This is the OTC.
Yeah, OTC, yes.
Yeah, it's the OTC, so you know it took a while to get my order in.
Yeah, I don't think so. TDA is good with OTC at all, filling the orders.
I don't think there's like simultaneous orders on the OTC. I think you literally get in like a 1,000,000 line long line.
Well, I traded an OTC last week because I was playing around with the auto send. I didn't even mean to get into the trade. And I clicked on something and it put me in it. And I was like freaking out. So I missed the exit because I would have made money, but I was freaking out. Okay, did I place that order? But I mean, it was a mistake. I didn't mean to. But it was so quick with the auto send.
Yeah, I know.
Yeah. I mean, even when I sold, I mean,
seems like you can buy
series, but it was still
selling
pretty
not so
quick.
easily.
So I don't know. Maybe I don't know how it's so quick because you said sometimes there's a lag. You know, when you can't get a fill or you can't get it sold.
That one was really laggy. I think everybody, I don't know. I knew that was the top, so I just went for it all. I just threw it all at it. I expected it to start going, and no, it was none of that. I didn't get nothing, and I thought my order didn't get in, and I started to get concerned, and I canceled it, and then I started to put in smaller orders in chunks, and I just started rapid firing them in. Nothing. In the meantime, RH was tanking, and I'm like, oh my God.
Yeah.
But anyway, our meeting time is over again. I think that's enough for tonight, right?
Yeah, pretty much. Yeah, we good. Just one last question before I let you go.
Okay.
Very noob question. Yeah. So you buy a contract intraday. You close the same contract, correct?
Yeah. You have to. I mean, it's like buying a stock. Every strike and expiration is like a stock on the stock.
Got it. Okay.
Okay. Does that explain it pretty well?
Yeah, thank
Yeah,
you.
if you touched another one, it would be unrelated, except for the
Yeah,
fact that you can use them for hedging against each other and create things called, you know, spreads and stuff like that.
I see. Okay. I think where I got confused when you were showing that how you look for option next contract, like, okay, we got in here, let's, so that created a little confusion. I wanted to make sure that I really understand what you meant by that.
Oh, okay. Yeah, I'm not sure what I meant, but maybe you understand it better now.
No, no, I do. No, okay.
Okay.
It's clear now. Okay. So,
All right, good. Well, tomorrow's another day, and I'll definitely be here and make
yes,
money either up or down, and hopefully it'll be
that's the spirit.
a
Yeah,
positive
I
outcome.
gotta make up what I lost.
Oh, please. I really would love that. And tomorrow's a great day. Let's think about that because the options are going to be super cheap. It's a great day to pick up a huge amount of leverage on something for just 400 bucks.
Nice.
It moves 20 bucks, you make all that.
Right.
All
All
right.
right.
Happy trading.
Thank
All
you.
right.
Thank you guys. Take care.